Hello, this is Manish Patel with IMTF Trade. Today's workshop, we're going to talk about backtesting, how to do it the institutional way. Why is backtesting critical? It's very critical for you to become a professional trader. Most retail traders do not do backtesting or don't do it effectively in order to sit there and turn that corner from being a retail trader to being a professional trader at all. Some traders do backtesting, but they don't do it correctly at all. So I wanted to create a workshop in order for people to do it correctly and start turning on that corner to become a professional trader. This is the same method that people do in the institutional side, even when you start creating algorithms for black boxes or for other type of machine type of trading. So why is backtesting critical for you to become a professional trader? Well, it comes down to a couple of things. One is when you start trading, you should be not second guessing yourself, or you shouldn't be thinking about the process, thinking about the trades, thinking about where your entry is, your stops, or anything at all. You should be executing your trading plan like a robot. Most retail traders do not do that at all, and it's typically due to lack of looking at a lot of charts and seeing that they're comfortable with it, or being a lack of being confident with their trading plan, where they're really not confident with their trading plan at all. And when that happens, what happens is you start trading a trading plan live. When you lose, you start second guessing yourself completely, and at that point psychology of trading comes into play, and at that point you start second guessing yourself, you start making mistakes, you deviate from the trading plan, and everything just goes downhill from there. You need to be like a machine which executes a trading plan completely over and over and over, where you're trading probabilities. And that's one of the reasons why you have to do backtesting. The second reason why you need to do backtesting is that you need to make the trading plan a habit. And that's not going to happen if you're doing things slowly or you're just doing it randomly. So you have to sit there and backtest for two reasons. One is that when you sit there and backtest with a set of rules, you know what the statistics are. If you're happy with those statistics that have worked in the past and generating those statistics, it's high probability it's going to sit there and generate those same statistics right now and also in the future. Okay? So if you have good results in the past and you tested it over a huge number of instruments and a huge period of time where you're not curve fitting, then you should sit there and have good results if your trading plan is good. And at that point, you should sit there and be able to be confident in that it works today and will continue to work in the future. Of course, markets can change, and this is why you have a trade log, which will pretty much tell you if that trading plan has changed and those statistics have changed. But that's a whole new scenario within itself. But what has worked in the past should have a high probability of working in the future, and that's one of the reasons why you do the back testing. The second is that in doing the back testing, you're looking at a lot of charts and you're executing your trading plan. As you're doing that, you're imprinting the charts in your brain. It's like you live trading for years. So this is how you could catch up with an active trader that's been trading for years. You could do the same thing and catch up with them, believe it or not, by back testing. So that's the reasons why you're doing back testing and going from there. Now, let's clear up one thing. Backtesting is time consuming up front. It's a lot of work up front. However, you get the rewards come later on. So when you're sitting there trading, believe it or not, 90% of your time should be backtesting and 10% should be trading. If you have a trading plan, and you could set up scanners and various things out there, or you could spot check, it doesn't take time to sit there and find high quality trades that fit your trading plan at all. So trading really becomes less and less time for you if you do it the correct way. Most of your time should be spent in doing research, and that's where majority of the time is pretty much allocated towards. Believe it or not, majority of traders actually start the backtesting process but eventually give up on it due to a couple of reasons. One, they're getting nowhere, doing a lot of work, and they get no results at all. Or two, they actually did get some good results. They traded in the live market and then all of a sudden things failed. And that was due to the process not being correct. So in this workshop, we want to start with the process being correct and start from there. And I'm going to show you how to do it the institutional way, the same way we create algorithms for black boxes. So let's talk about the process and go from there. Here's a software I use. It's called Moqups, moqups.com. This is what a lot of web designers use to mock up websites. I use it to pretty much draw up the flow for trading, for my trading plan. Okay, it's free for 122 objects and stuff like that, and then it's got a subscription after that. But literally in the free version you could create your entire trading plan, and if it's required more than 122 objects, believe it or not, your trading plan is probably too complicated and needs to be simplified. So that's the good thing about the free version, is you should be able to fit your trading plan within the parameters of the free version. If not, then you're pretty much doing something wrong to begin with. Okay, but very first thing you should do is you should start with the strategy, and this is what I call the baseline. Okay, the baseline is where you have a simple set of rules that you're going to sit there and implement and backtest. So for us, if you guys know from the IMTF trade, we have our shaded areas. Okay, so we're doing shaded areas, and let's just say this is dealing with breakouts. Okay, so I'm going to show you how to create these objects in just a moment, but I want to talk about the process first. Okay, so this is the shaded area right there, and basically we're doing shaded area breakout. So here what we do is we have a set of rules. You guys know that the green is basically bullish setup, the red is a bearish setup, and we have the blue dots basically that tell you exactly where the entry is, and the green dots are initial stop and the trailing stops. So what we're going to do is we're going to take a set of instruments. So you could take the Dow 30, S&P 500, or NASDAQ 100, or you could take the major currency pairs or the major future pairs, any set of those, and then pick your trading time frame. A lot of students, my students, pick 60 minutes or 240. You could pick daily, it doesn't matter. Pick a set of instruments and pick a set of a time frame, and then say, I'm going to go test it for 10 years. Okay, of course, if you're testing for 10 years for 60 minutes, that's a lot of data. For 10 years for 240 and daily, that's really good data. So 10 years for 60 minutes may be too much, so you may sit there and dial it back down. But your goal is to, at least on the first iteration, is get 200 trades that fit your criteria. Okay, where they're either going to win or lose, not cancel, but win or lose. So your first round, I always encourage is to get around 200 trades. So you back test that set of instruments, you get around 200 trades or more, and then you sit there and say, how many did I win or lose? So in this example here, out of 200 trades, I got 95 winners, 105 losers, and you know what your reward risk is. A lot of times, how do you calculate the reward risk? Well, you should have a set risk per trade. So if you know where your stops are, you know how many contracts you could enter or how many shares you could enter. So what you can do is to keep things simple, which I encourage in my university program is that I encourage my students to assume a $500 risk per trade and then go based on that. Okay, so based on that, you could calculate the reward risk and so forth for all the trades and overall for the portfolio. Now, once you have that, then you create these branches. These are optimizations. Okay, so in here, this is breakout or cancel, but this could be pretty much where you're doing optimization technique 1. Okay, where you could be applying some type of thing. Optimization. This is optimization number 2. Okay, now this is optimization 1 and this is optimization 2. This is keeping track of everything that you've done step by step. So very first thing you're going to do is run optimization 1, and at that point you should be able to collect statistics. Okay, so if you're collecting statistics, then what you're doing is at that point is you're just going to sit there and have a branch like this one here, okay, and you'll have statistics there, and then all you have to do is come over here and you'll see the results. Okay, now if this branch in here came down to 2 different optimizations, then you do that there. Okay, so this is assuming you're doing one optimization tree right there. Okay, I'm going to show you how to do that in just a moment. Let's delete this. Okay, so that gives you the statistics there, and this basically I'll classify in whatever I want. Momentum, which is I call it the optimization. You run the statistics and you see the statistics there. Then what you could do if off that branch is run 2 more optimizations, okay, and you do it that way. So to do that, you have these objects here. I just create this. This will be optimization. Just gonna call it opt, and opt here, right there. Okay, now I want to connect them, so if I want to connect them down, click here, click right there. Okay, whoops, I did that too wrong. So just do a control alt there. I could do this here, drag it from there. I could also come here and drag it from here. So now I have a branch there, do an optimization. It'll lead to these statistics there and these statistics there. Okay, you only sit there and whoa, getting finger happy here. You only sit there and start doing these optimizations. Let me connect this here, so I can just click there, and so forth. You only start doing these optimizations if these results are better than what they were before. Okay, so you don't sit there and go down a branch if you don't optimize at all. Okay, so in here, these were the original statistics here. So when I optimize this over here with this method, now instead of the 200 trades, I'm going to sit there and get what? I'm going to sit there and maybe get, let's say, 50 trades, because it's a great optimization. Of those 50 trades, now basically 35 were winners and 15 were losers, and my reward risk is now 2 to 1 or so. Okay, let's do it this way and go from there. So you know, with this optimization, it drastically improved things, and that's what you're looking for. Now, when you optimize here, where you're optimizing your winning and losing trades, okay? So now when you optimize over here on this level here, what you're doing is you're applying the optimization techniques to only 50 of these trades here. You don't have to go back to the 200 at all. You only apply the optimization to these 50 here. And that what happens is that a lot of the work happens here, where you accumulate the 200 trades, and then what happens is as you optimize, it gets less and less and less work. So if you optimize here, and hopefully if the optimization was good, then what's going to happen is that you may sit there and come down to, let's just do it this way. You may come down to 10 trades, and at that point where 9 were winners and 1 was loser, and now you got a 4 to 1 reward risk ratio, and that's exactly what you're looking for right there. Okay, yes, it's not many trades, but remember, this is only exploring one branch here. Okay, you have statistics here, and then you have statistics here. So what you're going to have is you have one trading plan now that you could execute in a live environment if you got enough trades. Of course, you want to try to get more sample sizes if you can. But what you could do is this branch here, if it produces good results, you may have another trading plan and so forth. So you have the highest probability trading plan, then you may have the second one or so forth, and you may not have any more after that. So it's up to you on how you begin this process there. Okay, now, okay, so we completed the high level method of backtesting. This is the same thing we do in our university in teaching all the different strategies on how to trade the markets completely and maneuvering around. In fact, this video is going to be mandatory for my university students to watch and learn from and to sit there and execute. So now what I'm going to do is I'm going to spend the next couple of minutes going through and showing you how to create these objects here and create this call flow. So again, this is the website right there, moquups.com. Okay. Once you sign up, then you have these objects here. So if I click on this object here, this is called start end. So if just click on here, you click on stencils, click on start, and gives you that object. Just drop and drag that object here. Okay. And then you could type in here shaded area. Okay. This object here is called decision 1. So I'm just going to click on decision 1. If I could spell. Okay. So I'm going to click on decision 1 in here. And I could just double click in there and type. Okay. Now when you type in these boxes here, if you come to the right hand side right there, there's the font control right there. There's the left justifying it. So you could center it. You could do for width, height, auto, colors. You could change the parameters of that box as much as you want there, or you could do bold here and so forth. Okay, I'm not going to go through details on that. This one right here is called document. This right here is called document 3. So I come down to document 3 and just come in here, drop and drag that guy in here and so forth. Okay. Now, if you're connecting these objects, if you want to connect from here to here, always click on the object you want to connect on, take that guy right there and drag it there. Okay. If you want to connect the other way from here down, you could just double click on there if you got one object, or you could just take and drag it and drop it there and watch what happens. This is what happens. So you can move these things around and it's very great to see. Okay. If you come in here to your left hand side, you could create different projects for different trading strategies. So if you come over here on my pages, you could see these different projects in here for different strategies and so forth there. Okay. So these are there. You have images, templates. There's so much stuff in here. It's incredible and it's so powerful too. But you could find more objects here if you go into stencils and you just come in here and you could see all the different stencils in here. Notice that's the common one. If you drop down, there's many more, and you could see it from here. If I just shrink these down, there's so many different ones they have. This is a complete tool, believe it or not, for people to use. To sit there and save it or print it, you have to use a thing called export. Okay. The other thing is that if you click on the M, you could sit there, save, open up new projects and stuff like that there. But how to sit there, if I click on export, I'm going to say select this page, and over here I could select it as a PNG file, PDF, or HX, HTML. If I want to save it to my computer, I do it there, or I could save it to my Google Drive or Dropbox, whatever it may be the case. To print it, you have to save it as one of these objects here, open it, and then you could sit there and print it. Okay, so that gives you a complete idea on how to sit there and create these trading plans through what we call flows, trading flows as I call them. If you have any questions, you could feel free to email me at info@eiicapital.com. Hopefully that helps you and turn that corner from becoming a retail trader to becoming a professional trader.